5th of February on a Friday. Time is 1:33 p.m. in Singapore. My name is Dylan and welcome to my daily trade analysis video. Now, before we go on to the begin with the currency pairs on the analysis itself, let's quickly touch on the US dollar. Well, as we know that today we have the non-farm employment change data that's going to be released at 9:30 p.m. in Singapore time itself. Well, let's talk about the US dollar strength. Which I think that the dollar will continue to weaken as the Federal Reserve has been sending a lot of signals that the current market outlook and based on the currency level right now, it is probably a problem for them to raise their interest rate any further. In fact, they have been sending a lot of dovish signals that they are not sure when they're going to raise interest rate again. They are not sure whether they're going how many times they're going to raise interest rate this year itself. So I do believe that the Federal Reserve is aiming to have a even weaker dollar before they actually give signals for a rate cut. Alright, so I do believe because of that, the employment data for today will probably be not as good or as compared to last month itself. So the dollar may probably weaken further later on at 9:30 p.m. Alright, let's kick off with the first currency pair. We have the Aussie against the US dollar. So let's take a look at the day one chart. Over here I plotted a Fibonacci retracement from the top to the bottom, and then we have a falling trend channel which almost comes to a horizontal line, but anyway, we are seeing that the price has been appreciating towards the retracement level of 30.2% at the price of 0.7335, which is also at the top of the falling trend channel. Alright, so since we know that I do expect that the price will, or rather the dollar will continue to weaken, I do expect the Aussie US dollar will continue to appreciate towards that level before we can actually look for a sell opportunity again. So into the smaller time frame, into the 4-hourly chart, or rather the 1-hourly chart, I'm just waiting for the price to retrace back somewhere to the support level at 0.7111 to look for a buy opportunity. In fact, it could probably be a little bit higher, close to the 23.6% retracement level at 0.7142. Based on the structure right here, we can kind of expect the price to appreciate a little bit and fell, and probably somewhere around this area we can go for the buy opportunity. Alright, so that's for the Aussie against US dollar. Next we have the New Zealand dollar against US dollar. Alright, so over here we have the day one chart. We have again plotted a Fibonacci retracement from the top to the bottom, and now we are seeing that the price is appreciating towards the retracement level of 30.2%, but however we are looking at the key resistance level at the price of 0.6873, which has been, this is actually a 2 months high. Alright, you can consider it a 1 to 2 months high. So this level itself has shown to be a very strong resistance level, so probably we can look for a sell opportunity as it reaches that level. So since again we expected the price to appreciate further, we are gonna look for an opportunity to go for a buy. So let's probably just remove this to the 4-hourly chart and plot it the other way around. Alright, so over here, if we were to look at the retracement level of 23.6%, well, there have been some support in the past, so that could be a possible price. Looking at the retracement level of 30.2%, I think this will be a much better price. Over here we have a lot of resistance, previous resistance turn to support level. Alright, come back here. We can wait for the price to retrace all the way back to the retracement level of 30.2%, price of 0.6594 instead to go for the buy. Alright, so that's for the New Zealand dollar against the US dollar. Next, let's take a look at the euro against US dollar. So as expected in the day one chart itself, we have seen that the price has appreciated after a very long consolidation right here, and right now it is appreciating towards in fact, it has already broken above the retracement level 50% at the price of 1.1115. Working towards the retracement level of 61.8%, but however, we do expect it to appreciate even further all the way till it reaches the key resistance level at the price of 1.1456, retracement level of 78.6%. Alright, as you can see that this is the key resistance that we are looking at. And of course, we have a probable rising trend channel that's forming right here, so definitely expect the price to appreciate further. So into the smaller time frame, in the 1 hourly chart, we have seen that the retracement, the appreciation has been pretty steep. So probably back to the retracement level of 23.6%, we can actually look for the buy opportunity. We have a previous resistance that may turn to the support as well. Alright, so that is for the euro against the US dollar. And so let's take a look at the euro against the Japanese yen. Alright, so over here, as we can see that in the day chart, we have a falling trend channel. Price has been resisted at the top, and then it is now coming down a little bit. Alright, so we do expect the euro will probably appreciate a little bit further against the US dollar, and one of the reasons is also because the European Central Bank may have to come up with something even more dovish than what they did in the past for the euro to start to weaken again, and we do not see that happening any sooner. So that will cause the euro to appreciate further against the US dollar. But against the Japanese yen has also been appreciating as as demand for safe haven assets is still pretty high. So this is a pair that is pretty much hard to predict. But however, since we have falling trend channel right here, we shall instead look for a sell opportunity, or rather into the smaller time frame. Alright, so maybe we can just plot a trend line right here. In fact, it is fitting pretty well. So let's wait for the price to retrace again back to the trend line to go for the south. Alright, since we are still seeing that the price is still falling within the channel itself. But however, when the price reaches the retracement level of 30.2%, the price of 129.91, we may want to take note of that, because there is a possibility that the euro yen will appreciate a lot. Then that is because based on a week 1 chart, we have seen that the price has been supported at the key support level at 126.16, and we may expect the price to appreciate from here instead. Alright, so that's for euro against Japanese yen. Next we have the pound against the US dollar. Alright, so we have seen that the price has rallied again, and then it moves sideways. In fact, during the MPC votes for bank rates, 9 out of 9 members has voted to stay unchanged, as compared to 1 that actually suggested to raise interest rates. So that is actually something bad for the currency, since it shows that the Bank of England is not ready to raise interest rate at all any sooner. Alright, but however, based on the technical chart in the week 1 chart, we do expect that the price for pound against the US dollar will continue to appreciate. As we can see, the falling trend channel right here, we have seen that the price has been supported at the bottom with very clear signal of reversal, followed by the confirmation that's forming right here. So we can expect the pound against US dollar to appreciate a lot further. And of course, I do believe that another reason is because it's really pretty much oversold. Alright, so let's take a look at the 4-hourly chart. We are waiting for the price to retrace again back to the top of the previously broken rising trend channel to go for a buy. So into the 1 hourly charts, what we can do is to plot the Fibonacci retracement from the bottom to the top. Alright, so probably somewhere back to the top of the previously broken rising trend channel and towards the retracement level of 30.2% at the price of 1.4469. This region itself could be the region we can look for to go for the buy opportunity. Alright, so finally, last but not least, we have the dollar against the Japanese yen. Again, in the day 1 chart, we have the falling trend channel, and we have seen that the price has fell unexpectedly before it even reaches the top of the falling trend channel, and I do think that suggests how much the dollar will probably continue to weaken further, and and it also reflects on how high the demand is for the Japanese yen as safe haven assets. But however, since we know that the price is about to touch the key support level at 116.12, and at the same time at the bottom of the falling trend channel, we may just want to go for the buy opportunity based on the technical analysis. Alright, so zooming into the smaller time frame, we may just jolly well wait for the price to touch the key support level at 116.12 to go for the buy. Alright, so that's for the dollar against Japanese yen, and with that I've come to the end of today's trading analysis video. So thank you for watching, and I wish all of you a happy Chinese New Year as well. Alright, so I'll see you again next week.